Lined up for you next, and this is about the digital future of finance. And for this particular panel, we have our very own moderator as well, Mr. Narayan Ramamoorthy. I'd like to invite him first of all onto the stage. Mr. Narayan is a Chief Revenue Officer, Global PayX, leveraging technology, processes, operations, and customers/market needs is what he enjoys doing. Put your hands together for Mr. Narayan Ramamoorthy, everyone. And it's time for our speakers. So Mr. Neeraj Gupta is the first speaker I'm going to invite onto the dais. He's the CEO, PolicyBazaar.ae. He envisions fostering a behavioral change in the UAE relating to how finances and social security is perceived in the region by the masses and promote digital channels as the preferred medium for the consumers when managing personal finance. And I know a thing or two about that because I've been working with Policy Bazaar for quite a few months now. So welcome Mr. Neeraj Gupta onto the stage, everyone. Next up, I'd like to call upon Dr. Ali Moayeri onto the stage. I hope I'm taking your name correctly, sir. Dr. Ali Moayeri is the Vice President Strategy and M&A, MasterCard. He leads development of MasterCard's corporate strategies and objectives for 81 countries, mind you. Put your hands together for Dr. Ali Moayeri. Up next, I'd like to invite Mr. Michael Ryberg Hartmann onto the stage, please. He is the Chief Business Officer for FinTech Galaxy, experienced in business, product, engineering, and innovation. He's a leader with 20 plus years of experience. Doesn't look like it though. Still look very young.
I like you already.
20 plus years of experience for him driving digital transformation, scaling platforms, and activating ecosystems through partnerships across financial services, telco, and startup space. Ladies and gentlemen, for you, Michael Ryberg Hartmann. All right, last but not the least, yeah, it would be nice you've had your food as well. Some energy would be good, guys. So last but not the least, I'd like to invite Mr. Sheikh Mohammed Noman onto the stage, please. He's the co-founder at Mortgage Hub. He's a life coach, a social educator, running the investment funds with a portfolio of, guess what, $1.56 billion. So inviting Mr. Sheikh Mohammed Noman onto the stage. The topic, once again, is digital future of finance, rather. And I'm going to leave it up to our moderator, Mr. Narayan Ramamoorthy. Over to you, sir.
Thank you so much.
And welcome all the gentlemen onto the stage.
Hello. Thank you so much. Great to be here. I know we are keeping you from lunch, but hopefully we'll try and be as entertaining as we can, co-panelists. Right? Well, the beauty of this panel is actually we are representing different aspects of finance, right? And probably a very wide array. So I represent B2B automation and payments. That's what I do. Noman comes with Mortgage Hub, digital assets, and a whole lot of other experience, which I'll let him kind of speak about very soon. Neeraj is insurance and all kinds of personal finance, right? Ali is MasterCard, no introduction required there, right? And Michael is into open banking and all the cool stuff to enable ecosystems, right? So there's a very interesting panel that we have here across pretty much all of finance. Okay, the first question, and I'm going to pose this, starting with Noman, is in your industry, in your area of influence, what are the current trends that's kind of happening, Noman?
Thank you, Narayan. Well, there are different kind of aspects. Mostly, the financial tools are moving towards a digitalization, like a blockchain, and there are some people that are still looking for a regulation for the blockchain and crypto and NFT stuff for the trade as well. But wherever I'm going as an educator, I'm teaching people because there is already regulations there. By the Bern Convention 2004, 180 countries had signed that agreement, and UAE is one of those countries where you can do the trade on behalf of your IP, intellectual property. So this is a trend is going on, and from the financial aspects, the banks are a little bit conservative from the crypto because the thing is not regulated, and people are not being able to convince the banks that why we are already legit, because they themselves don't know about it much. That's what it is.
Thank you. Neeraj?
Hello. Okay, in personal finance, if I talk about especially the insurance field, right? I know it would sound very old age, but at least in the UAE right now, we have started talking about APIs. Which, if you look at from a digital ecosystem, this should have been like ages ago. But what we are seeing is, at least now they talk about making a digital experience for a consumer. Right now, what is happening, if you look at insurance, at least from an India context, India has really evolved from a financial services perspective. Whereas in this market, we are right now only talking about enabling the transactions digitally. What I look down ahead, if I talk about a couple of years ahead, I hope we can have the seamless experience, not just a buying experience, but a service experience also digital, right? That is one of the aspects that this market is now taking up.
Thank you for the question. So what we are seeing in terms of trends, especially for the payment perspective, for companies like of MasterCard or the ones that operate card networks, is that lots of non-traditional financial institutions are getting into the payments business. So you have likes of telcos, you have likes of ride-hailing providers, Uber, Careem. They are all looking into get into financial services. And the reason for that is that there is lots of untapped opportunity when it comes to financial services. As you look at the whole landscape of payments, the only part that's digitized is mostly around P2M flows. And you have lots of untapped opportunities, especially in our region, UAE, that G2B business or like P2G or other flows are still operating within cash or cash equivalents, checks, your rent, for example. So lots of those players aspire to digitize those flows, MasterCard included, and basically to touch those flows. So that's the trend we are seeing, that lots of non-traditional financial players are pursuing. At the same time, in the countries like, and this is more prevalent for sub-Saharan Africa, you have a huge unbanked population, and in those areas, again, telcos and other fintechs, they leapfrog technologies and come up with solutions such as mobile money, digital wallets to basically serve this population, make them banked. And for us, like companies like MasterCard or our competitors, which we offer card networks, we come up with digital, like innovative digital solutions such as what we call digital first issuance, whereas you have on your digital wallet, you can apply for a card and you get it at the same time and add it to your wallet, and you can use it through your NFC technologies. At the same time, given those countries, what we are seeing is that there's very limited acceptance for payments. So because your typical POS terminals are quite expensive, especially in countries with low level of income. So the solutions such as what we call MPOS, where you turn your phone into an acceptance point, is quite prevalent. So these are typically some of the big trends we are seeing, at least within this region. I'll discuss it more in detail in our next speaker.
I think mine is working. Yeah, it sounds perfect. No, so what I see, just to the point of my panelists made before, is open finance and open data is kind of the underlying foundation for opening up or kind of embedded finance. And what we're seeing in the region currently as FinTech Galaxy, because we work with regulators, we work with banks, is that we've seen a larger intention to actually pursue open banking across MENA. So obviously there are different maturity levels are currently in place. We've got Bahrain, who was the first mover. We've got Saudi, who are kind of coming in as the first fast follower. But also UAE, we see things are moving quite rapidly. So I think to the point of saying financial services of the future will be unbundled, is basically be something you do not think about, because technology, again, will create this seamless journey and allow financial services to kind of sieve into your everyday experience, and so you won't see it as much anymore. And for that to work, you need regulations, you need standards, you need APIs, and that's really great to see that the regulators in the region is now pushing that agenda, because even though we can see certain services that you can engage with as a consumer, I would also question the liability chain of some of those services. And at the end of the day, the bank, of course, is there for a reason. They serve and are trustful and trusted by the consumer. And so really want to, when you're unbundling kind of the banking or the financial services, you really want to make sure that that kind of trust is built into every single part of this equation that makes up embedded finance, where there are more people, a larger ecosystem that are enabling some of the opportunities that we discussed before, was mentioned before. So that's really why I see kind of it's the greater kind of the perfect storm that is brewing in the background.
Is about to happen.
Yeah, it requires
Awesome.
a lot of things.
So the perfect storm and, openness and acceptance, trust, right, across the chain is the theme there.
And standards.
Right? A whole host of different payment mechanisms, right, in addition to standard P2P kind of flow, or P2M kind of flows, right, is what Ali was talking about. We heard of APIs, right, between banks, for insurance companies and all that, so that you can ensure distribution happens to a larger, audience, is what we heard you. And with respect to Noman, the topic or the theme was about, new currencies, new digital assets, adoption, regulation, etc., right? That lends me to the next logical question. The ecosystem, right? Let's talk banks, let's talk insurance companies, let's talk lenders, right? Who owns the customer, right? Are they open to kind of coming into open banking? Because they're going to lose control today, right? It is the bank who owns the customer. They decide what to sell, when to sell, how to sell, at what cost to sell, right? So these are large P&Ls for banks, all of these products that we are kind of talking about. But because of all you guys, that's going to change. So what's happening in that ecosystem, both with respect to the providers like banks and regulators? So that's really the next question. If you ensure the mic works.
No worries, I'll take it. Hello. Yeah, so in the ecosystem, the banks are not still comfortable to deal with the new technology. I'm ex-investment banker, by the way. It's 14 years in end. So I'm from the traditional background, now in the digital background. So I've got both experiences. So banks are still hesitant to interact or deal with the digital assets, like Avara and DMCC has issued the licenses, ADGM is issuing the licenses. But banks are still hesitant to deal with that. Why? Because they haven't been given the proper instructions to accept the technology.
Right.
Because a blockchain, okay, you're dealing in a blockchain, it's a software, it's a technology you can implement to finish the corruption. Because one of our projects we are applying in Ghana to implement the entire government system in a blockchain so that no human influence. If there will not be any human influence, there won't be any corruption. So blockchain is one of the tools to finish the corruption as well. Whether there is no, computer cannot do corruption.
Yeah.
So because of that, you can do the all modification in the government system, in the banking system to avoid the human influence. So this way you can create the whole ecosystem over that.
So broadly the theme is there needs to be a little bit of a top-down mandate.
Absolutely.
In order for the players, that's what you're broadly.
100%.
So if you look at the ecosystem, right, as you mentioned, who owns the consumer? I believe time will tell who owns the consumer, but in today's scenario, see, you have two sides of manufacturers, right? If you look at banks also, there are banks who've taken a view that, okay, we will embrace this, we will work with partners, we will work with people who are building the fintech story or the ecosystem and try and get them on board, right? There's one side of the story, and there is the other side of the story where the banks are saying, okay, this is gonna happen, but let me build this myself, right? And I genuinely believe you can't do everything on your own. See, we are the tech leaders or the fintech. We also ourselves at Policy Bazaar, we can't do everything ourselves. We are also partnering with companies to do some things which is a priority for them. See, for example, just to give you an example on the payment side, for us, we process at least at a group level, $1 billion of payments, right? For us, every decimal counts. Now, it could have happened that, okay, let's build a payments company itself, right? Because it'll take care of the cost. But then the payments is not our forte. That's not our core business. So as a result, what I believe is the entire ecosystem needs to start looking at that. From a bank's perspective, I believe their major or the main task is underwriting the risk. Or similarly, if you look at an insurance company, that is underwriting the risk. That is the core competency that they have. And it's not that, okay, how nicely can a consumer transact or how fast can he transact. If you look at it, that yes, they've gotten into that, but that's not the core why they exist, right? So it is imperative for everybody in the ecosystem to start working with each other and probably if you keep the consumer at the center of it, I believe other things will take care of it.
Awesome. Thank you.
So in terms of banks, I mean, what we are seeing is that, especially with open banking, you have two archetypes of countries or markets. Ones are like US, Canada, Europe, where it's mostly industry driven, and you have the open banking players and like the banks coming up with basically the code of conduct for open banking. And then you have likes of this region, like UAE, Saudi, where you have a regulator-driven type of approach. And you see that lots of regulation is coming in from SAMA in Saudi, from Central Bank of UAE on open banking. And the outlook is that basically what's going to happen is that if you look at the value chain of banking industry, it's going to get distributed, and some of the elements will get outsourced to different players. So when this happens, in terms of customers that banks deal with, they at some point will be at arm's length. So you wouldn't necessarily basically have the direct relationship with at some elements of that customer journey. For example, for KYC, in many countries now there's an eKYC provider which most banks use, so that relationship is now outsourced. So for the banks to have a seamless and like a frictionless customer journeys for onboarding customers on other banking elements, it's very essential for them to rethink how they operate and how they come up with innovative customer journeys that is seamless as possible, and considering that in the future their touch points with the customers will be less and less, and hence they need to basically revamp those interactions.
And I'm sure you as MasterCard is sitting, you have relationship with all the banks everywhere in the world, right? Yeah. So you are probably even getting some of those inputs and partnerships and APIs or whatever to these banks, some of them new gen, some of them old gen, to enable the change, I hope, right?
Correct, yeah. So in terms of, we are B2B business mostly, so we deal with banks, non-FIs. And we look at one of the businesses we do, we look at the customer journeys of the banks and help them from our consulting business and advisors business, how they can improve, how they can become more efficient in terms of dealing with the customers in their mobile banking app, in their online banking, even in their physical banking space. So we provide that service, and like the trends we are seeing is lots of banking customers they are asking for us to help them basically revamp all of these journeys.
Understood. The guy probably right at the heart of all of this. So you work across, 10 different countries trying to enable open banking or more, right? Give us some anecdotes without naming the country or the bank. As to what really is happening on the ground. When you go to a bank and say, hey, dude, you now have to expose your data, right, on an API to anybody who calls it, right? That's really open banking, right? Obviously with a framework and all of that stuff. What are they telling you?
So just to bring it back to your original question, like who owns the consumer or the customer? The customer. They own themselves, right? It's the intent of open banking, open finance to empower the customer to choose from a variety of services that actually suits them better, rather than the bank owning their data, owning their services, and they being kind of to some extent locked in. So the intention is again to kind of unbundling, as I said before, and enabling the customer to be at least served up more options that are fitting their lifestyle, their needs on an everyday basis. And it doesn't really matter whether it's a consumer or it's a business or whatever. But the intention is, again, if you set things free, new things will flourish, new innovation, new financial services will come to the market. And so back to your kind of questions around like what's happening in the market. As to my fellow panelists of saying so Bahrain is of course moving, Saudi is moving, they each are having taken their slightly different approach. I think the main challenge from my experience from Europe and then coming down here is that every country is on its own. So everybody wants to do their little special sauce, which doesn't necessarily create a very homogeneous market where you can cross-border or you can passport. So there's no EU, there's no multiple countries following the same laws or legislation over here. So every country is doing their little thing. They're getting inspired by Europe, inspired by other places, but everybody has a slightly different kind of variation of the same. So you can normally say it's a UK open banking standards, kind of sets the base layer, but then you would do a BOBF, which is Bahrain's version, then you'll have the SAMA version or kind of the Saudi version, and you'll most likely, when it comes out in the UAE, you will have the UAE version. Everybody is trying to figure out how do I learn from the other markets, how do I actually implement this faster, how do I enable my market to move faster. And everybody's, like you're saying, is coming either from an industry or a market-led approach, and they won't have the best of both worlds. So if solely based on regulations, it will stiffen the market. If it's based only on the market's drivers, so to speak, it will create questionable liability chains, as I said before. And so we really want to find that mix where there are structured standards, procedures, and clear liability chains, but there's still also room to test out certain things. And you will see this in UAE as well, right? You've got policies that are coming in or regulations that are coming in to address some of the unregulated areas. And of course, some fintechs that have invested in these areas will take a hit because all of a sudden they are regulated. In open banking, open finance, you have to be regulated, right? Otherwise, you can't get access, which makes a lot of sense because you don't want to create new financial services for your customers or your customers' customers if it's based on non-consent, so to speak.
Yep.
So yeah, I think it's a very interesting space at the moment. I'm hoping that each of the regulators across the MENA region will learn from other markets as well, both within MENA, but also from Australia in terms of how they actually structured their data access, from Brazil, how they actually got payments right faster than the UK, but obviously also like from PSD3 that's coming into Europe. So taking basically the best of all worlds and trying to make it work for the special characteristics of a given market here.
Cool, awesome. And I love the answer, the first one which you gave. Who owns? It should be the customer, right? Not the bank, not the fintech or whoever. Ideally, it should be the customer, either a SME or a consumer or corporate, who should own their financial data, and they should choose, right, as to where they want to give it, when they want to give it, in what context they want to kind of give it. I think that's pretty awesome. And interestingly, a slightly different anecdote, right? So I was listening to a podcast called All In, right? I don't know how many of you guys listen to it. It's by Chamat and a bunch of guys. Super cool podcast. All of you guys should hear it is what I would kind of recommend. But anyway, so one of the debates that they were having is in the social media or in the search space, right? Today, Google owns all our data. Right? And they choose how to kind of use that from an ad spend perspective or whatever. Similarly, Facebook or whoever else, right? But with Web3, that's what people are trying to change, right? The debate was really AI, right? With generative AI like ChatGPTs of the world, saying who is going to win? And the point of view really was very vertical AIs, each consumer will eventually have an assistant, right? That they kind of choose how to, where to kind of go, how to make my travel plan or all that. So eventually, probably even ChatGPT is not going to win. It's going to be very hyper-personalized. And that's where this answer was very interesting. It is, at the end of the day, open banking is going to enable the customer to choose, consumer to choose. Okay, that gets me logically to the next question. I'll probably change the order a bit, right? Maybe I start with you, Ali, and then kind of is, in the last 2 years, from a end customer perspective, either a consumer, a small business, what's really changed in your specific industry, right? What use cases have really been different, better, simpler, cheaper, faster, more convenient, in context, whatever, right? What's really changed?
So in terms of payments in our core business, which is like card payments, like what changed, and this is post-pandemic generally, is that user behavior in terms of card usage has changed significantly. Before, I mean, the use of things like Apple Pay or like contactless payment was less prevalent in our industry compared to today. Today, in most markets, like what we call contactless transactions, like Google Pay, Apple Pay, contributes a significant portion of type of transactions that we are processing. So that has been one big change compared to, I would say, 2-3 years ago, where usually you would swipe your card or you would use your other payments. The second one was lots of transactions has moved from physical space to e-commerce. So you had like a significant e-commerce boom again, thanks to COVID and post-pandemic, or like the lockdown. There were like lots of so like lots of e-commerce transactions have picked up. But given that e-commerce is very prevalent now, that's brought other problems such as fraud and like those things that now companies like MasterCard, we are leveraging AI and machine learning to like help the banks and financial institutions to be able to score transactions. So the way that typically happens is that we have lots of data points about your behavior as a customer, that how much you spend usually, where do you spend, which device you use, even like on your mobile device, we can track like what's your angle of your device, how fast you are speeding. So this is type of analytics that goes as multi-point analytics, and then the transaction gets scored, which is going to be provided to your financial institution, which can then decide to accept or reject the transaction.
Bank calls me when I'm in the US or whatever, saying, did you do the transaction? You guys are doing some work and providing.
Yeah, so us and our competitors, all of the transactions are real-time scored, mostly, and then the score, and then it's up to your financial institution to let it get approved or rejected. So they have their own risk metrics and their own kind of decision models that they do to basically approve a transaction. But typically that's how it's done. So these are the two trends that we saw in our industry that's changed compared to 2 to 3 years ago.
Interesting. Thank you. Mike?
So I think to the point again, because you're setting data free, and you're getting people that are not born and bred within the financial industry to think about solving certain problems, you get different solutions. And so because you're setting data free, because you're getting different mindsets, you're also getting some interesting use cases which are not vanilla banking services or born and bred from spending 30 years in the banking industry and thinking about a financial products in a certain way. So for instance, you leverage, it could be for doing lending based on POS transactions. So to the point of like you do credit scoring. So how do you do credit scoring? How do you know that a certain business is good enough, steady enough to get a particular loan? And how do you use technology to digitalize everything so that it becomes instant? We talk about instant payments, but instant loan is obviously also very valuable for small consumer, or for SMEs or SMEs. And I think when you start thinking about what kind of data sets are out there and what data set can I feed into this technology, being AI or credit scoring as a whole, then you start seeing new ways of solving particular pain points where the financial institution is not necessarily at the center of it, at the heart of it. And you create different value chains that are basically fixing the pain point, but without having the bank front and center. And that's, again, we come back to unbundling, as I said before, and again, because that is really where I believe kind of the future of finance lies. It becomes something you do not think about, it becomes embedded in everyday life. Because at the end of the day, I mean, who enjoys going to a bank or a branch? I mean, yes, I've seen banks creating coffee shops because they don't know what to do with their branches and other exciting things. But you don't enjoy it, right? You enjoy spending the money, you enjoy earning money, but you don't enjoy going and getting the money, right? So it just needs to be something you're not thinking about. And so it just becomes a step in a journey. And to like use the typical example again for, do you get a mortgage or are you buying a house? So there's not a journey around getting a mortgage, but the end goal for the consumer is getting the house. And you can apply that logic to a lot of the kind of the thinking and the use cases and the journeys and saying, what is it really they want? What is it really they need? Well, the pizza shop needs to open another pizza shop because he found that his particular recipe was the best in town and he wants to open another one. He wants to scale. How does he scale? Well, he wants to open up a shop. How can you build that customer journey? So it doesn't mean for him to go to a bank, fill out 30 forms and wait for ages and then getting a rejection and then all the other plans goes to waste. How can you embed this lending experience where he knows I can do this? I can actually open up the next pizza shop, I can get a good interest rate, and I can have it set up in a month.
Awesome. Thank you.
Well, this data is, you can say it's a data privacy kind of a stuff because in a banking, data is not secure nowadays. I mean, I'm sure you must be getting hundreds of calls every month. Everybody would have getting a lot of calls. How come they have got our database? And then we are getting several calls from different superstores that congratulations, you won that and you won it. And then, for example, in the Eid holidays, we were planning to go somewhere, and all of a sudden, all the packages started popping up on my mobile.
So in addition to Google knowing all of that, even these phone callers know.
Everything is being recorded, and they are listening everything, whatever we are doing, whatever we are talking about. So there is no data privacy at all. And
What's happened in the last couple of years? You're saying it's got worse?
it got worse. It's going to be more worse because it's a war. It's a data war. It's a data war. Everybody wants to collect the most data to sell out and make more money out of it.
So that's a scary picture. Okay.
100%.
So, at least on the insurance side, what we are saying is, the last 2-3 years, you've become more digital while onboarding a consumer. Earlier, you would have those physical forms, wet signatures, or you will have underwriting processes. For example, at a country level like India, what we've been able to do is, now everything while you're buying a policy, earlier you might have to go through a medical checkup. But during COVID, everything was shut, so you couldn't do that. So what we've done is, via technology, we are able to underwrite a consumer digitally. So now you don't need to go for a medical test. We'll do your video scan. We'll do whatever is required from a questionnaire perspective and probably come to a consensus that this consumer can be onboarded. So one of the things across the region, and if you look at globally, is more consumers are being onboarded digitally so that there is no physical contact there required.
Convenience aspect is
Exactly.
disruptive.
See, two things. One is convenience, obviously from a perspective, and a scale perspective, right? At scale, so for example, if you have a physical intervention, for example, if I need to do a physical test for people, then scalability becomes a challenge, right? Because tomorrow I can only schedule so many tests or I can do only so many physical meetings. Now what happens is with the digital coming about, the scalability comes about, right? One solution, if it works, then if it works for 100, if there are million consumers, then it works, right? I don't need to deploy more resources, time, and energy on that. And similarly, on the banking side, we are seeing that. Exactly, right? Yeah. That's a different discussion. But similarly, we are seeing on the banking side as well, right? From at least a B2C perspective, earlier, if you wanted a credit card or a loan, you would apply through some agent would come down to you, meet you, you will fill in a form, you will sign the form, it'll go to a bank, probably 3 days, 5 days later, he'll call back and tell you, okay, sorry, you need to sign this document again, or something of that sort, right? But whereas now what has started happening, and a couple of banks are already doing that, you go online, apply, and you'll get an instant approval. They'll give you a very low limit, sort of a thing with a digital card. But what that enables you to do is you can transact now right? And probably the physical card will come in a day or two, right? At least on the onboarding side, what we are seeing is more digital. But as my other panelists said, how that shapes up from a data privacy security perspective, we really need to work on that because we are obviously leaving a lot of room to misuse this. But yeah.
Okay, so we have 2 or 3 minutes left. Questions from the audience? Yeah, please. Yeah.
Hi, good afternoon. A very esteemed panel. In fact, I was looking forward to this discussion. The question is to all of you, but just before I put up my question, Mr. Sheikh, I'm a technologist myself, so don't be scared of the technology. You very rightly said that the data is no more private, but nobody listens to you, right? They observe you, for sure. But if you see, with the competent authority, I can tell you, nobody listens to you as such, but they observe you for sure. So you have to choose what apps you download and what permissions you grant them. So the permissions are granted by you. It is something very similar to when you go to the banks, you apply for a loan and then you sign everywhere without even checking what we are signing for. So similarly, all the apps which basically are in your mobile devices or smart gadgets, your wearables, they observe you. Listens, nobody does it. But yes, you're 100% right that data privacy is nowhere. Right? Pardon me?
It's compromised already.
It's finished. So we all are naked as far as the IT ecosystem is concerned. And that again, I'm from the technology side, I'm telling you. The same question I did to the previous panel, but I think this panel is more suited to answer that as the world is moving from our current financial ecosystem is basically very, very monetary driven. You know, we are all dollar, dirham, yen, Indian rupee driven. This system is fast moving away from monetary system to a value-based system. So how do you see the digital ecosystem itself changing when the whole chronology of finance itself is going to change going forward? MasterCard can answer, and of course, Neeraj probably will invent, but I think Michael also will have some interesting inputs. That will be very interesting to understand. That as we are transforming from the monetary system, we no more will be transacting in dollars or dirhams. UAE and Saudi already does it. India and Russia are already doing it. 48 countries are already doing it since last 1 year. But as we go further, when it becomes a norm, how the existing system, when it transforms, is looking like?
Well, Ali, the answer is super simple. It's 16 digits, all right?
Sorry?
Yeah, for like companies like MasterCard, I mean, we technically doesn't touch any money. So we don't touch any monetary value. So we only provide the rails and the security, basically the network. So no, like MasterCard doesn't touch any money. It's all, the risk is underwritten by issuer, whoever gives you the POS gets the payment. We just facilitate that. So the money, it only flows through us. So for us concerned, yeah, we see trends such as CBDCs coming up, and we work with governments and other players in that landscape as well to help them to facilitate that. But in terms of the flow of money, whatever it may be, it still needs to go through a pipe, and that's what we provide. We pipe the security and technology and reliability of the pipe.
Yeah, that's true. That obviously can come from
Yeah.
MasterCard. But my again the question is that there is no flow of money that is going to happen. For instance, I'm the architect of one of the CBDCs that is being used between UAE and Saudi Arabia. We do balance of payments every week, and it is totally beyond SWIFT, totally beyond IBAN, totally
Correct.
beyond dollar. Both the currencies are dollar pegged, by the way.
Yeah.
Saudi is also dollar pegged. UAE is also dollar pegged, and both of them don't transact when they settle each other. They don't do it in dollar and SWIFT, right? The war that started last year, it's not between Russia and Ukraine. It is against the existing hegemony of the world's monetary agencies, right? So we are fast moving away from the flow of money to the settlement of payments, right? Previous panel also was discussing settlement payments. So there is no flow of money any which ways. India and Russia don't settle payments at all. There is nostro, vostro sitting in each other,
Yes.
right? So one settles in nostro, other settles in vostro. Done and dusted. So that is the system that I thought that probably since all of you are basically on top of those ecosystems, maybe you can.
You know, so I've been in the payment space for a very long time, right? B2B, obviously, there are a lot of cross-border flows and stuff like that. So I completely agree with what you're saying. Trends have started big time, right? Two things. One is the whole correspondent banking network is super inefficient. In terms of time.
Dead. It's dead already.
Yeah,
it's living way past its expiry date.
Sometimes it takes 3 days for the money to kind of reach the destination, which is bizarre, right? It needs to be, forget about seconds, at least within the same day, right? So that's definitely kind of changing stuff. Two is blockchain, right? At the end of the day, everything is an asset liability. It's a book entry, right? In terms of, for example, you know, debiting Saudi, crediting UAE, right? Dirham kind of stuff. Blockchain definitely, I think, is playing a huge role there.
It is. Right? It is true.
Cool. Any other questions, guys? Because I know we are holding you from lunch, so we'll take one last question if there is. Okay. Thank you so much. Anything else to add, panel? Thank you. Thank you so much.
Thank you so much, Mr. Ramamoorthy, and thank you so much to the panel as well.